Hi friend, Joey Jones here with Union Home Mortgage. Wanted to kind of give you an update on what we're seeing as far as market projections. The biggest thing I want to talk about is Fed Chair Jerome Powell is slated to end his term in May of 2026. Now, many people have said that he should have been cutting rates by now. He should not have let inflation get as bad as it has gotten. It was like 40-year highs. It's been a mess. It's been a rough 3 to 4 years in the mortgage business, and I know you're feeling it as a realtor as well, because people with 2s and 3 interest rates aren't really excited about 6 and 8% interest rates. Thankfully, they're starting to come down. There is talk that President Trump is going to get rid of Jerome Powell prior to his term expiration in May. They don't like each other, and it's no secret. They despise each other. So Trump's going to try to push him out before his May term ends. But worst case scenario, his term is over in May of 26, and his replacement that's slated to replace him is more aggressive on a rate cutting policy perspective. So we're optimistic that hopefully around May of next year at the latest, rates start to come down. And that's going to be very supportive of home values for our clients. A lot of people are talking about mortgage crash or a housing market crash and blah, blah, blah. The last crash was caused by horribly written mortgages back leading up to 2008. If you could fog a mirror, you could get a mortgage. That's not cool and it's not okay. But that's what happened. So right now what we're seeing is supply and demand. And in 2008, there were 4 million homes for sale in the entire United States. Right now, there's 35 million more people who need roofs over their heads, and there's only 1 million homes for sale in the entire United States. So it's a supply and demand issue. When rates get lower, notice I said when and not if, when rates get lower, being cautiously optimistic, but the data does support that, then we're gonna see more buyers enter the market. You've got the people with the 2s and 3s, interest rates on their current homes who have thought, I'm not gonna buy, but they've had kids, they've gone through divorces, they have too much stuff, too much debt, whatever. Life's expensive, life happens. So the statistic is for every 1% that interest rates drop, another 5 million buyers will enter the market. So whether that's new buyers who have just been living at mom and dad's house because rates were too high, or it's buyers who had lower interest rates who were just like, we're gonna stay here even though we can barely move through our house because it's too small. But that's kind of what we've been seeing on this end. So there is optimistic news at the end. We're always here for you. If you know me, I'm kind of a data nerd. I live in the numbers, and our company has every loan program under the sun. And I mean that, I'm not blowing smoke. We just rolled out a land loan. We have home equity lines of credit. We have bridge loans. We have renovation loans. I can't think of a loan we don't have. We have VA new construction. We have FHA new construction, conventional new construction. We've got renovation loans. We've got loan products that other lenders don't even offer. So we would love to help you. Our company does not sell our loans. If you ever had a mortgage and it got sold to Mr. Cooper, Loan Care, one of those companies, it's a pain in the butt. Our company doesn't sell our loans. You do a loan with Union Home, you make your payments to Union Home, and our servicing department prides themselves on answering the phone before the second ring. Tell me you're gonna get that with a Loan Care. Have an awesome day. Please don't hesitate to reach out. We'd love to help you and your clients.